been written and it has been told.
Welcome, our fellow YouTube viewers as well as listeners. I just finished reading this book maybe a couple of weeks ago, and I watched the news this morning and they announced that we're in a recession. So it's important to understand what key individuals make certain decisions that may help us get further into debt or out of debt. Let's get to the book. The book is right here. Bernanke's Fed, the Federal Reserve after Alan Greenspan. This book is written by a gentleman named Mr. Ethan Harris. Mr. Ethan Harris completed this book, I believe, spring of 2008, this year. And Mr. Ethan Harris is a macroeconomist himself. He used to work for Lehman Brothers. We all know what happened to them. Recently, I believe he moved on. Now he's working for Capital Barclays. Okay, so let's get to the book. One of the important aspects of this book is that the Wall Street Journal had did a report just getting some information about how people felt about Dr. Bernanke and his chairmanship. And the studies revealed that he had a 7% approval rating. And the reason his approval rating was so low was because 67% of people didn't even know who he was. Well, during these times, this man is very important because the decisions he makes affect us all the way to car loans, all the way to student loans, mortgage loans, everything, because he is the person who meets up with the other group of central bankers and decide interest rates, and also with this bailout, he's basically in charge of the group of bankers that lend the money to the government, that then the government takes the money and lend it to other institutions. First and foremost, they're going to bail out the banks. Then secondly, they're going to bail out lending institutions that are not banks. And I don't know when the bailout will actually hit Main Street per se, but I guess it will one of these days. Right now, as I speak, I believe the three major auto companies here in America are actually testifying again before the Banking and Finance Committee, explaining why they should have their status moved up as far as who gets first cut of the bailout. And I think it's phenomenal, but it all revolves around Dr. Bernanke and how he perceives the way things should be done. Okay, but before you can get a good understanding of Dr. Bernanke, it's important that you have some basis of his predecessors. The two predecessors that are important that you must have some understanding about before you can understand where he's coming from is Paul Volcker as well as Alan Greenspan. Now, Paul Volcker was the Fed chairman, I believe, from 79 or 80 up until the crash of 87. He's been credited, he was the great inflation fighter. And during that time, unemployment rates were up then, during the 80s, And being here in Washington, D.C., we pretty much know what that's all about. And then after the crash of 87 came Alan Greenspan. Alan Greenspan sort of took the constructive ambiguity out of the Fed chairmanship, and he was more of the type of person that was in the limelight. Like when you thought of money or any associations with money, you would normally see his face, or you would see him doing an interview of some type. And he also had his face on Time magazine, and he did a lot of interviews, Meet the Press, and so forth, which is uncharacteristic for the chairman for the Federal Reserve to really get involved with. They usually play a low-key role, but I believe they're too important to be so low-key. So when discussing Dr. Bernanke and how he's running the Federal Reserve, it's important to know that when he took over the Fed chairmanship, he was left with serious bubbles, asset bubbles, and during his chairmanship, the major asset bubble that burst was this housing market. So he has to devise ways to deal with this asset bubble that burst and how to keep this economy growing. Now, the growth may be through more debt. Basically, I mean, I can't think of a way right now where we can actually accumulate wealth without having to deal with this fiat-based currency, which is debt-based. But his his philosophy, at least according to this book, is from the Keynesian model of economics. I can't really get into. I don't really know. Honestly, I don't have enough time to really sit down and explain the complicated ins and outs of Keynesian economics. But I can offer this. It is the type of economics that believes in the private sector handling the affairs of the economy. In other words, I guess, to relate it to the United States, the private lending institutions, such as American Express, your different mortgage companies, such as Fannie Mae, Freddie Mac, so forth, turn over money to them and let them deal with the complicated ins and outs of growing this economy. Also, Dr. Bernanke is, according to most economists, they call him Helicopter Ben or Ben 52 because he's a student of the Great Depression, and he's also a great deflation fighter. So if there's a way to stimulate the economy, he has a tendency to provide more money, such as stimulus packages, and he's also more likely to lower interest rates also. So during these economic times, when you have situations where banks are defaulting on loans, individuals defaulting on loans, and big corporations defaulting on loans, his philosophy will tend to lean towards the direction of providing more capital, such as fiat-based money, to let the economy stimulate itself and continue spending. Okay, he's different now as far as personality-wise. According to this book, it's hard for an individual to actually pinpoint his views politically, and also it's hard for the Fedbird watchers to really know if he's a hawk or a dove. I mean, he's right in the middle. Unlike Alan Greenspan, where you can pretty much say he's a hawk on inflation or any of the other economic troubles that may come about as a result of this system. So in summary, I feel rushed because it's not enough time to really get into the book, but there's one thing I want to touch upon before I go, and that's the gold standard. According to this book, the gold standard it could be a problem because of circulation, and also the gold standard, even though it holds the government in check, the reason we got into this fiat-based economy is because the goldsmith figured out that you can't carry gold around, so it's easier to transport gold if you have a receipt indicating that you have this amount of gold. So I don't believe he would have a tendency to move towards the gold standard. But I'm sorry guys, I'm running out of time. I don't mean to cut this short, but I recommend that you get this book, especially during these times. It will give you at least some type of basis of where the Fed chairman is coming from, and it also may give you some perspective on how Barack Obama may address the economic situation that's going on today. So in conclusion, I would like to thank you guys for watching. I appreciate you viewing me. I love you all, my fellow YouTube viewers and listeners.
Are you drifting? Or can you jump aboard the riffraff and sail, sail and sail and sail?